Alright guys, back with another video. So this one is going to be a pre-recorded one. I want to interact with this particular video real quick because I know like there's a narrative here that kind of coming to play. Anytime there is the best time for you to get into GameStop, this is usually what happened. Or at the very least, they want you to sell into the loss, right? Now, this type of negative sentiment has been coming to GameStop many a time, so I just want to kind of showcase this type of thing over and over again, just to tell you that the media is out there that have bad intention. Of course, like again, it's in perspective here. In their opinion, they're trying to save you from losing money, right? But in my opinion, I think that they have not done that, in the decades on end that I've ever heard of, right? They don't seem to care about retail that much. They only care about making the institution money, right? So we all know that CNBC is owned by private equity. And so these type of things is going to come out of their segment all the time. And this is why it's so skewed towards GameStop being a terrible company to own. Long term or not even long term, just a short term trade, even, right? And so let's look at this one, and I'll come back after.
On Wall Street, Trump media tanking. Company reporting a net loss of $58 million last year. They had just actually a couple of $1 million in sales. But it wasn't just them. Investors at AMC, Reddit, GameStop, and more also got whacked today, which kind of brings up an
you see all this
are these
again, these three company has nothing to do with commons, right? In common. For some reason they kind of couple AMC and GME and the other stuff. But watch what the segment is trying to get you to do.
wild swings in meme stocks, not just today, but going back months and years. Are they a good or bad thing for retail investors? We know it sounds weird, right? Nobody wants to lose money. Up good, down bad, unless you're short. But I think there can also be lessons in losses. Let's talk about it with the godfather of retail options trading. That is Tom Sosnoff, founder and CEO of brokerage firm Tasty Trade. Tom, don't want anybody to lose money, but the point is, especially for the noobs out there, newbies to the game, there are powerful lessons in understanding not only, taking losses, they hurt, but minimizing and mitigating risk.
I think the whole meme stock going back to 21 and what we've seen lately, Brian, is just, I know people are going to say, losses are bad and this and that and jumping on, these hype stocks is bad. But the reality of it is if it engages people in the markets and it gets people to be self-directed and manage their own money and make decisions and learn how to be strategic and learn how to be smarter investors, I think that there's no downside to it.
You see, like this is deliberate. The show of losses, as you see, right? And of course, like AMC, we know what AMC is, 94%. And then GME, of course, again, we know what GME is. It's 56% from the high of the whole meme stock saga type of, move. Now, of course, this is a TMTG, that's a Trump stock, right? People are social, truth social, whatever. And then the Reddit. Now, note every single loss, every single screen out there, it's always showing these type of things, right? And watch this guy. What is this guy trying to get you to do?
Oh, we just called you the godfather of retail options trading. So Godfather, I can't do the accent. Help us out. You come to me now. Give us some lessons, basic things that your audience, our audience could and should be doing if they're going to play in that game. And it is a game.
No question, it is a game. And you know what? This is a game. The most important thing is, first of all, you got to realize that some stocks like AMC and like GameStop, they're kind of old news. And I'd probably stay away from both of those if you're hoping.
Oh, stay away from both of those, right? Of course, it's old news. Now it's old news. It wasn't old news before, right? And again, like they want you to stay away from GameStop and AMC. Of course, stay away with AMC. We know what AMC is, but for GameStop to be in that same category, it's so disingenuous, right? Now, all of these companies, except GameStop, are losing money. GameStop is actually making money. So that's why it's such a disingenuous way to go about covering this. And again, they do this intentionally, okay? Let's continue to watch.
for some kind of crazy upside explosion or some, some cheap upside calls or something. I don't like it. I don't like either of those plays. But if you're interested in DJT or you're interested in Reddit, those are both interesting plays with some pretty wild, there's tons of liquidity, 18 million shares, I think, traded up DJT today, 13 or 14 million shares of Reddit. And they have very deep, relatively liquid option markets in Reddit, okay option markets in DJT. But if you're a strategist and you want to enter a game with high volatility, and in one case, DJT, with a lot of interesting put skew, and the other case, Reddit, with a lot of interesting call skew, meaning just the velocity of risk is one stock to the upside, the other stock to the downside. Those are both really cool plays.
Okay, you said put skew.
So again, they want you to go to get option, which is a very risky way to make money, right? Or lose money. Again, like learn about option and you wouldn't understand how diabolical this type of advice is, right? For investor. Like in a long-term investor, obviously you don't want to do that. And again, these people want you to lose money by betting up and down, whatever, right? When you are betting up and down, you're actually making them money. Who is them? Market maker, people who are owning this particular channel. They want you to buy, sell, in and out, going in and out of a stock, right? So that they could skim pennies out of you. So that's the whole playbook here. They want you to stay away from GME, have you think that AMC is the same as GME, right? Every playbook or every single thing that they could do to steer you away from GME. And they're doing it again, right? You have these people coming over saying GME it's not a buy or shitty company and all of that stuff. But I hope you understand that. I'm not gonna go any further. So if you want to go and look at that particular video, you're welcome to do that. So I'll just end it here. Again, GME is profitable. GME doesn't have any debt. GME has $1 billion in the $1.2 billion cash. Okay, and an amazing CEO. So, all right, that's all I have.